A very good afternoon to all the participants. On behalf of Grand Thornton Bharat and my fellow panelists, I am delighted to welcome you all to this insightful session on the latest introduction of our invoice management system. I am Sajin Sharma, partner with the firm specializing in indirect taxes, tax technology, and incentive with practice of the firm. It is my privilege to represent Grant Thornton Bharat in this session. My fellow panelists are Sajin Shinde, who is a chartered accountant having 2 decades of experience in indirect tax consulting, large consulting firms. He's a partner with Grant Thornton Bharat and based out of Pune. His experience spans across clients and industries, and in addition to, he has undertaken multiple GST trainings for department officers in Mumbai as well as Pune. Amish Agarwal is also a chartered accountant. He is a director with the firm. He has over 15 years of experience in indirect taxes. He co-leads IT technology development with me at Grant Thornton Bharat. During this webinar, we will explore the various aspects of IMS, which is set to transform how businesses handle their GST compliances. So, what have we covered in this webinar? IMS features, benefit, challenges, and the reason for its introduction. So, why do we need IMS at all? We are well aware that reconciliation process for availing input tax credit is difficult for a taxpayer. If we see our GST at 2B, many records are there, sometimes incorrect records also appear, which needs to be amended by the supplier in the subsequent month's return. To address this particular issue, of course, there are many other. GST portal has introduced the IMS. IMS will do what? Primarily, there are 5 things which IMS will do. That is, reduce error in claiming ITC, improved reconciliation, verification of invoices before availing ITC, facilitates in matching records available with the recipient against the details submitted by the supplier, also avoiding future litigation specifically for ITC mismatch. How IMS will work? So my colleague will discuss in detail. They have followed very simplistic approach, realistic flowcharts to make you all aware about it. We have covered overall framework, including step-by-step approach in this webinar. Now I would request my colleague Sajin Shinde to discuss further. Thank you. Sajin, you are on mute.
Thank you, Sachin. It's a pleasure to connect with all of you on this important update that is coming. Now, before I kind of give you a perspective about the purpose, framework, and the ramifications of the IMS system, it's always interesting to understand the history before we kind of move ahead. It helps us to build a rationale in terms of the manner in which and the reasons why the government thought of bringing up this IMS. Any new introduction of a system is also going to create some level of disruption. But when you understand the rationales behind why such disruption is created, it is basically helps us to understand and prepare it well. Now, technically speaking, IMS, or though it is called as IMS, it's not a system or a thought, if I may call it, alien to the government. The government, when in 2006, under the Kelkar committee, the report that was formed, the 13th Finance Commission's report, the task force was empowered to kind of identify introduction of GST and a host of other measures. At that time itself, the concept of having a reconciliation on an invoice to invoice basis was ingrained in their minds. So it's not something which is alien to government. So therefore, they have not introduced something which they were not aware of. Unlike, I still remember in 2016, when we were onboarding GST, e-way bill mechanisms and e-invoicing mechanisms, those were not thought through at that point in time. But invoice matching mechanism was something which was conceptualized right at the beginning itself. So what the government today has done is introduce that mechanism on a foundation which involves a lot of technology. And that is what the entire IMS system is. So initially, rather when they were contemplating on an IMS system, the thought process was, can we have something like a demat account, kind of a philosophy, where whenever you are purchasing any transactions, the transactions get recorded into your demat account directly. So that was the background under which this entire concept was moved ahead. Nobody challenges the purchase or the sale of transactions through a demat account. Now that is exactly what they wanted to bring in terms of a process into the GST mechanism. The reasons were, very clear. They wanted to make sure that the fake invoicing rackets which have been, which the government has seen, the challenges in the reconciliation, the mismatching of transactions, those are something which it wanted to avoid. The government actually started in bits and pieces, right from the state government also. They started this mechanism while in the VAT regime as well, where, for example, in states like Maharashtra, Gujarat, and some parts of, other parts of the country also, they had mechanisms to do this reconciliation. May not be on an invoice basis because the systems were not geared up to that extent at the state level, but they had some mechanism to have those checks and balances. The intention was very clear, that they wanted to have extreme level of transparency between the supplier and the recipient. So that is the intention, that they wanted to kind of have this entire mechanism in place. And therefore, the purpose, if you see here, has been only to make sure that the data points that are incorporated in the returns are verified, leave aside by the authorities, but by the supplier and the recipient themselves. So they wanted to enable that both these parties come together, be transparent, open their transaction, disclose it. So there's very minimal element of verification that may be needed, right? So that's the fundamental reasons why it wanted to bring in this system. Parallelly, they also wanted to make sure that the credits, which is nothing but cash for dealers, that is something which is well verified. And I think these two principles are the reasons why the government wanted to make sure that these credits are verified and controlled and are transparent. With that principle in mind, with that purpose in mind, they set out that framework wherein they actually helped the recipients to identify what are the kind of invoices that they would want to have. So invoice visibility was something which was very crucial. Now, there could be, it's a double-ended sword. If I say that the invoice are recorded, but they are not available real time, the industry is going to chase or represent again to the government saying that the invoice is uploaded, but we are not able to see it on a real time basis. It has the other angle where if it is available on a real time, there are organizations who don't process those invoices on a real time basis. So it's a double-ended sword. But what the government has done is to make sure that these invoices are available and visible as and when the supplier uploads those invoices and saves on the IMS portal. So that's the fundamental framework that it is come out. Let me assure you that getting a real-time system operational, functional, it's a challenge. And the task that the government has currently done over a period of 7 years, after looking at how the invoicing mechanism, the e-invoicing mechanism, the learnings from the e-way bill processes, all those learnings have been brought to make sure and enable the dealers and the industry at large to look at on a real-time basis what are the invoices which are uploaded. Parallelly, it also gives an opportunity for the recipient to take action on those invoices, be it that communication. So it's basically open doors in a formal manner through a government portal for both the supplier and the recipient to talk to each other. And I think that is very, very crucial to kind of look at. And that's the action points that we need to kind of look at. How these actions will have repercussions and ramifications on us is something which we will delve further as well. And they've integrated this IMS very well in the current process of filing the returns. And I think this framework is something which the IMS will unfold shortly. But the ramifications out of this entire process are something which is very crucial for us to understand. I could look at this system in both a positive or a negative manner. If someone looks at it on the positive side, I can look at saying that I get data about my vendors' invoices on a real-time basis. So I'm able to action those very effectively. Is it going to be increasing my compliance burden? The answer to that is yes, it will increase my compliance burden. but it will eliminate my reconciliations or my disallowances or my rejections, which happen eventually at the time of audits or assessments. I've seen and I've dealt with situations where when we are actually going for audits and assessments, at that time we realize that my vendor has either not uploaded my invoices or I've not paid taxes. Instead, it is bringing in more facilities for the vendors and the customers to talk to each other and confirm a transaction. So that will result into increasing the compliance burden, but it will be solved at that and there itself, rather than taking it to the time when the audits or assessments happen. Parallelly, this is something which I can assure you that the way the e-waybill process and the other tech enables were happening in the entire regime, the government has built up that process and has expected us to kind of dive in as early as maybe 2 months. That level of training is going to be a challenge. So this is going to impact, and because of this IMS processes, there is a lot of trainings which need to be granted, let's say internally, be it with the procurement process, be it with the indirect tax teams, be it with the finance teams, be it with at times when the auditors. I'll come to those elements eventually. But there needs to be adequate training, and those trainings may not be present. Typically that's how it works. And I did tell one of my clients once that we will be first thrown into the water and then we'll be asked to swim. But the best part is, as we are trained to swim in the rough waters as well. And I think eventually we will get through that process also. So with that, giving an outline of what this IMS, the history, the purpose, framework, and ramifications, I will hand over back to Sachin to get into the nitty-gritties of the IMS process.
Thank you, Sachin. It's helpful knowing history about it, Chemical Committee's report, or finding in 2006, 7 years of learning to be implementing now, and mentioning pros and cons. Very well covered. So, as I understand, IMS will allow recipient to either accept, reject, or keep invoices pending, including debit and credit notes, as received from their supplier, or on top of that, no action as such. So input tax credit of the invoices accepted by the recipient will flow into their GST at 2B, whereas input tax credit of the invoices rejected will not flow. Effective from 1st October, IMS functionality is a crucial step towards setting new norms for commercial practices for industry. I must say, intention of government are commendable to introducing IMS, which goes beyond just credit alignment, as Sachin has mentioned, but success depends on several factors like robust technology, a comprehensive legal framework to address disputes, if any, and timely availability of recomputed GST 2B after 14th of every month, reflecting any change made by the recipient regarding invoices accepted or rejected. Also, IMS currently lacks flexibility in partially accepting, rejecting, or keeping transactions pending. On top of that, GSTN or government may need to reconsider the proposed implementation timeline of 1st October, considering the business are adequately prepared. So, as Sachin has also mentioned, I encourage all businesses to engage with this system proactively and take advantage of available resources as well as training to navigate these changes smoothly. Now, I would request my colleague Amish to discuss technicalities around it, following simplistic approach, uh, flowchart methods, etc. Over to you, Amish. Thanks.
Thank you, Sachin. Thank you. So let's now go into the technicalities, of the changes of this new system that has been announced. And let's start by understanding what is the change that, will bring in the entire compliance framework that we have today. So quickly, just, as to understanding what is the current flow of the overall framework of GSTR1, claiming input tax credit and filing of a 3B. So it starts, as we all know, starts from the generation of an e-invoice, which auto-populates our GSTR1 data in the GST network. So once the, e-invoices get saved and other records also saved by the supplier on the GSTR1, and GSTR2A gets dynamically updated of the recipient. By 11th of the subsequent month, the supplier files his GSTR1, which auto-populates our GSTR2B by 14th, and accordingly, it also auto-populates and gives us a auto-drafted GSTR3B on the portal, using which the recipient files his 3B for that specific month. Now, what is the change, that has been proposed? What are the additional steps that will pitch in to this present process? First step remains the same, whereby e-invoices will auto-populate our GSTR1, and the supplier can also add other invoices or debit notes or credit notes on his GSTR1. Now, in addition to the GSTR2A being dynamically updated, this new process of IMS comes into picture. Along with 2A, IMS will also be updated on a real-time basis. Now, as and when the IMS gets updated with the records that have been saved by the supplier in his GSTR1 or maybe IFF, the recipient will then become eligible to take actions on those records, which typically are accept, reject, or keep it pending. And lastly, the system also says that if you do not take any action, it will be deemed accepted. Then again, by 11th of the subsequent month, the GSTR1 is filed by the supplier. And according to the actions which have been taken by the recipient in the IMS, a draft 2B again gets generated on the 14th of the month. Now, between 14th to 20th of the month, the recipient is again open to take actions on all the data which comes in the IMS n number of times. And basis all the updates that he does in the IMS, he will have to regenerate the 2B, which will be updated basis the updated actions taken in the IMS. And once all the actions are finalized by the recipient and the final GSTR2B has been regenerated, the GSTR3B will be auto-populated using the final GSTR2B figures, and basis the same, the recipient is supposed to file his GSTR3B. So this is, current vis-a-vis the proposed systematic changes that are being proposed in the new system of IMS. Now let us have a look into some of the key highlights that have been announced with respect to the IMS. So let's start with the IMS dashboards, and then we'll move on to what are the nitty-gritties with respect to its impact on the GSTR2B. Now, first point obviously is that whenever any records which is invoice or a debit note or a credit note is saved by the supplier on his GSTR1, be it either through e-invoicing or be it directly on the portal, that will be made available to the recipient on his IMS dashboard, on which the supplier is required to take the necessary actions. Now, before filing of GSTR1, it is also possible that the supplier may make changes or amendments or updates in the records which he has already saved in his GSTR1. So the IMS dashboards will also get updated by this updated record, and the original record will be updated with this new record. And any action taken by the recipient on the original record will be reset, and he will be required to take fresh action on the updated record. Now, a very key feature of IMS is that after we file the respective 3B of that month, all the records on which the actions of accepted, rejected, and deemed accepted, which is the no action taken, this will flush out of the IMS for that respective period. And only the records which have been kept in the pending state will remain in the IMS and be available in the IMS dashboard for the recipient to take action in the subsequent months. So coming to GSTR 3B, as we have already discussed, the draft 3B will get generated on the 14th of the month, and obviously basis the actions which have been taken by the recipient on the IMS. Now, it is also possible that the recipient may not take any action before 14th. So the draft 3B, 2B which gets generated on 14th will remain as per the current process. One thing is very critical to note, that it now becomes sequential in the sense that GSTR 3B filing for the present month is quite essential for generation of the 2B for the next month. Else, my draft 2B will not be available to us in the subsequent month. As and when the actions are updated in the IMS, because the recipient has time till 20th, or you can say till filing of the 3B, he has to regenerate the GSTR2B to give effect to all the updates on the actions that has been taken in the IMS, for which the recipient has no restrictions, and this can be taken a number of times before filing of the GSTR3B. GSTR1, if it is filed by the supplier beyond the statutory deadline of 11th, then the respective invoices for that GSTR1 period will be reflected in the GSTR2B of the subsequent month, and accordingly credit also will be available in the subsequent month, which will ideally mean a loss of 1 month to the recipient for claiming of that input tax credit. One more critical thing, which has been highlighted in the advisory is that after filing of GSTR 1, the recent facility that has come up of GSTR 1A to make any amendments in the records of that particular month. So, with respect to the IMS, the 1A records for the specific month, although will appear in the IMS on a real-time basis, but they will form part of the GSTR 2B in the next month, and the recipient will be able to claim credit of those amended transactions only in the next month and not in the first month. Moving ahead, let us now understand as to what is the impact of the different types of actions that have been proposed and what is its impact on the recipient's GSTR 2B and finally the 3B. So four actions: accept, reject, pending, and no action. So what happens when the recipient takes an action of accept on any record? For all the accepted records, the records will flow to the ITC available section of GSTR 2B, and it will also auto-populate the GSTR 3B as an eligible input tax credit. For all the rejected records, it will flow to the ITC rejected section of 2B, and one thing to note, it will not form part of the GSTR 3B. For all the pending records, it will not be considered either in 2B or in the 3B. But as already mentioned, pending records will be there in the IMS and will be available to the recipient in the subsequent months as well, subject to the time limit as per the GST law, which is the 30th November or before filing of the GSTR 3B of the October month of the next financial year. If the records are still kept pending, they will be removed from the IMS after the 3B for the month of October is filed, and the time to claim credit of those invoices will lapse and they will never appear in GSTR 2B. No action is deemed accepted by the GST portal, and as already highlighted by Sachin, although IMS is not mandatory, it will add to the compliance burden. It says that no action is deemed accepted, but ideally what we see is that it will become kind of mandatory to take actions on all the invoices, and this will also be auto populating as eligible input tax credit in our GSTR 3B. Now, nothing, comes out without exceptions, as we have always seen in the last 7 years of GST. So here also in IMS, the portal has come out with certain exceptions. So there are certain nature of transactions which will be excluded from IMS and not form part of the dashboard of IMS. So what are they? Reverse charge records. Because there is no input tax credit involved in the same, it will not form part of the IMS. It will directly flow to the GSTR 2B. Records which are ineligible for input tax credit in terms of the place of supply of the recipient and that record, and as per the time limit under section 16(4). Records reported in GSTR 5, which is return filed by a non-taxable taxpayer, and GSTR 6 by an ISD. So these records also will not appear in IMS but will directly flow to the GSTR 2B. ICE gate documents. So typically the bill of entry, which we claim ITC on with respect to our imports, will also not form part of 2B. And lastly, records where ITC is to be reversed under Rule 37A, which primarily deals with the cases where the supplier has not paid his liability with respect to those invoices in his GSTR 3B. So these are certain exceptions which have been carved out by the portal, and these will not form part of the IMS, but yes, it will form part of the GSTR 2B and accordingly also form part of the GSTR 3B. Moving ahead, let us just delve into a specific situations of amendments where it is said as to how the recipient is required to act in these situations. So considering a situation where the original record, be it an invoice or a debit note or a credit note, and the amendment of that same transaction are there in two different GSTR 2B periods. So one in, let's say, in the month of April and other in the month of May. So the advisory says that in case the recipient wants to take action on the amended record, it is mandatory for him to take action on the original record one first, file that 3B, and then only he would be allowed to take action on IMS on that amended transaction. Else, even if he takes and clicks on, let's say, an accept or a reject action on the IMS dashboard, that will not get saved on the IMS dashboard. Correspondingly, if the original and the amended transactions, they both fall in the same period, then as already we have discussed, I think in our second slide, the updated record will update, the amended record will update the original record, and in that same month itself, the recipient will be allowed to take action only on the amended record, and he need not take any action on the original record. Now, having discussed all
So,
this,
Amish,
let us... Yes, sure, Sachin.
before we move ahead, now as you rightly mentioned, that there are actions which have to be taken where you accept, you reject, or keep it pending. One very crucial element when it comes to invoices and the corresponding credit notes typically that would come in. It's important to highlight that credit notes don't have the option of keeping them in pending. So you have to necessarily accept. Now, the moment you accept a credit note, if you look at a timing from a business standpoint, typically when an invoice gets received by me in my system, in my ERPs, the procurement team verifies, it comes to finance, it goes into those GRRs and all those processes that it has to complete. And typically it will take around 15-20 days at times to record an invoice in my books for it to really help me to verify with my 2A, 2B, and so on and so forth. However, assuming if my time is, let's say, 20 days, and within that 20 days, let's say in the first 10 days itself, a credit note is issued by my supplier. Now, in that situation, I will have where credit notes are deemed accepted if you don't take any action, which means that I've not recorded a purchase, but I've to necessarily record a credit note, which means my credit has not increased, but my credit gets reduced or impacted because of a forceful recording of a forceful acceptance of a credit note, which will reduce my ITC. Now, those are things and those are transactions that we have to really identify, that how do I have those recording of credit notes and invoices in the same period. If you have a larger period for recording of invoices and you correspondingly have a credit note, you have to keep a watch over it. Businesses will now have to draw out some level of policies and processes while doing that acceptance, reject, or keep it pending, some kind of an SOP or some kind of an understanding, be it with vendors or be it internally between procurement teams and us, to kind of have that level of coordination so that my input tax credit does not get impacted or reduced on account of a forceful acceptance of a credit note. These are elements that we have to actually look at it from a business standpoint and set processes accordingly. So I thought I'll just bring that up to you when we're looking at those acceptance and rejections of processes. We can move ahead further.
No, thanks, Sachin. And Sachin rightly pointed out. And just to add, there is a more twist to this. Okay. And I think the government has given a very mindful thought on this. And we will discuss this in our next slide. Let us now understand the flow. Although we have discussed, in very brief, let us see the flow as to how, based on timelines, what is it that the supplier will do and what is it that the recipient is required to do. Because any taxpayer will play the dual role of being a supplier as well as a recipient. So both angles of the IMS, is applicable to each and every taxpayer. So for the first month, from 1st to 31st, records get saved on the GSTR1. You make amendments on the portal. Recipient is then eligible to take actions on the saved records. And then finally, we move on to the M2, whereby by 11th, the supplier will file his GSTR1. And although IMS is still open for me, I can take actions as and when I want. On 14th, the draft 2B will be available to me as a recipient. If any action is taken on the IMS, then the effect of it will also come in the draft 2B. If any action is not taken on the IMS, then basis the GSTR1 filed by the supplier, the 2B will get generated. In the meanwhile, the recipient can take n number of times the actions on the records which have been saved on the IMS, and every time he takes actions and updates the IMS, he will have to regenerate the GSTR2B. And once the final actions are taken, the final GSTR2B is generated, the 3B will get auto-populated, and accordingly the recipient is supposed to file his GSTR2B. Pending records will not form part of GSTR2B and will remain in the IMS dashboard. Now, parallelly, the supplier, or as a supplier, you can also file GSTR1A, whereby you can do amendments in the records that have been filed in GSTR1, and you will file also your GSTR3B by 20th of that month. Now, moving on to M3, which is kind of very critical here, that the records which have been updated in the GSTR1A, although will come on the real-time basis in the IMS, but effect of them will come in the draft 2B of the subsequent month, which is M2. Now, starting as first on M3, the records for M2 will also start coming. You can take actions on them also. And on 14th, when you again regenerate the draft 2B of GS of the M2, it will include the records of M2 plus the GSTR1A records of M1. And as Sachin was mentioning, we will come to that. So by 20th of M3, the supplier will file his liability, his GSTR2B 3B for M2, whereby his liability may increase in his GSTR3B basis rejection of certain records by the recipient in certain scenarios, which we will discuss in our subsequent slide, and which will have reference or relevance to what Sachin has just mentioned. So again, coming.
I have a question here. So, for example, if I do not take any action with respect to any invoice, so one, you have mentioned that it would be deemed to be accepted. But if I keep it as a pending or rejected, so how the flow would be? It will go up to M5, M6, M7.
So Sachin, all the pending records will not form part of 2B. They will form part of my IMS only.
Okay.
For all those which we accept, they will form part of my 2B and go to 3B as well.
Okay. So
For
there
all
is a
which we for all which we reject, they will also go to my 2B, which will auto-populate into my ITC rejected section and will not form part of my 3B. For all the deemed accepted or no action taken, they will be treated as accepted. They will form part of my 2B and also my 3B.
Absolutely. I'm just now rethinking about the organizations who would have 10,000 or 15,000 invoices every month, right? In fact, we as a Grant Thornton, we receive also many invoices every month. So how to take actions about that? Okay, of course, wherever we know that vendor has this kind of invoices where we have to reject that. That is okay because we have identified few vendors. Or maybe we have to do some kind of a ABC analysis wherein we have to figure it out that how to cater these kind of vendors wherein we can reject in one go, accept in one go, or not to take any action at all or keep it pending. So these kind of things also one needs to be sorted. Of course, wherever the integration facility is there, then life would be smooth. But wherever integration facility is not there, it would be lead to a great challenge for bigger organization, I would say. Yeah.
Agreed,
Thanks.
agreed,
Rather,
Sachin,
Sachin,
agreed.
on that note, it's not only a technology-related issue of, it's more from a business process standpoint also.
Absolutely.
Now, the
Absolutely.
challenge is between procurement and the finance team. So whether an invoice to be accepted or rejected, the call is not of the finance teams or the tax teams. It's typically of the business teams, which is the procurement teams who say, okay, this is agreed. This is in line with what we had agreed as per the PO, all terms accepted, and then kind of comes in. Today, the situation is when my purchase register, I compare it with my 2A, 2B. That is what I currently do. But there is a purchase register. The moment it comes in the purchase register, which means that some people have verified in my system, the procurement team, there are buyers who would have verified it, and then it comes to finance, looked at it from all perspective, and then gone into my purchase register. But this activity in the IMS is going to happen without these people having looked at. So therefore, is the finance team really geared up to answer or respond or accept or reject immediately? The answer to that may be no. So therefore, the internal coordination between the procurement teams as well as the finance team has to be extremely strong for them to get some guidance that yes, this invoice needs to be accepted or rejected. Finance teams and tax teams can't reject that invoice in isolation. So therefore, these conversations between the finance teams and the other business teams become extremely crucial when such kind of transactions are expected to happen. And that now is no more an option. It's now forced on the business teams. And this is exactly what right from the conceptualization of GST was, that the business teams, which is the purchase and the sales and the finance team, need to have much more coordinated effort to kind of make sure that no transactions are accepted, rejected, or kept pending unless it is agreed upon by internal parties. So internal process management becomes very crucial for this. And
in
thereafter, the technology to help us to kind of upload
right,
it on a bulk basis.
right, absolutely. So in nutshell, there are two takeaways, I would say. One is internal process should be streamlined a lot,
Absolutely.
and which basically needs to be followed every month on month and month. And second thing is, of course, relying on technology a lot. So there are two facts which needs to be underlined, which needs to be followed for future set of compliances. Yeah, thanks. Over to you, Amish.
And just to add, to your point, Sachin, there will also be cases whereby a credit note which has come in IMS is not even recorded in our ERP.
Right,
So the tax
absolutely.
team or even the procurement team may be unaware as to, what this credit note, relates to, and then how do, in a such a short span of time, we take a call as to, whether we accept it or we reject it.
Of
And in the
course,
conversation between 14th to 20th, that coordination between the procurement teams and the finance team has to happen. Because if you don't take action, it will be deemed accepted, especially
yes.
for credit notes. And it reduces my input tax credit. So that is something which is going to be very crucial, how we set up systems for internal communications.
And this is
Absolutely.
the twist I was referring to, Sachin. If we see the slide, which is right now there on the screen.
Right.
So as I already mentioned, I think in my third slide, so everything comes out with exceptions. And here I think the department has given so much of thought here that they have come out with exceptions saying that on these kind of 4 transactions, you cannot keep it pending. In the first month itself, you have to take either an accept or a reject action on this because no action is always deemed accepted. And if we notice these situations, these are those kind of situations where the liability of the supplier gets reduced, and correspondingly the buyer is required to reduce his input tax credit. But it has been a long pending dispute, I think, ever since the assessments and audits have started, whereby the department puts onus on the supplier to prove that the recipient has reduced the ITC, else his liability gets increased in the assessment or the audit. Now, I think to plug this loophole, the department has come out with these exceptions that the recipient is mandatorily required to take action on these transactions, which typically, if you see out of 4, 3 are credit notes. And even the fourth is downward invoice or debit note, which ultimately reduces the recipient's input tax credit. So here the department is trying to safeguard its revenue, and I think somewhere it will also help in the assessment or the audits for taxpayers as well. So whereby if I do not keep it pending, if I do not take any action, it goes into accept and it will automatically reduce my ITC in my 2B and 3B. So, the supplier is then not required to prove anything to the department. And if I, reject it, then I am not able to reduce my input tax credit. And effectively in the subsequent month, so in the M2's 3B of the supplier, his liability will auto increase in his 3B because the recipient has rejected the credit note or these 4 nature of transactions in his IMS. So the department is playing a very, safe game here and safeguarding its revenues. And to be, very frank, saying here that Sachin, the point you pointed out, it's going to be a very painful task, as a company or as a taxpayer to take a call on the acceptance or rejection of any credit note or amendments within such a short span of time.
Right, right. Absolutely. It would be a painful task, but as Sajin Shinde has also mentioned that water is there when we have to swim, and ultimately, of course, it will also happen, but it will take its own sweet time, maybe 6 months settling the process, familiarized with all these processes and coordinating with multiple teams, whether it's a purchase team, supply team, then a finance team, and sometimes management also come into play to take larger calls. Right. So these kind of things will happen. Of course, it would be a tedious task, but yes, we are there to help. Yeah, please go ahead, Abish.
So with this, I hand it over to Sachin Shinde to
Yeah.
take up the slide and move forward.
Thanks, Amish. I think it was a very well elaborate discussion on the technicalities of how this entire functions will operate, what are the exceptions. But needless to say, there are few takeaways one need to really look at to make sure that this process, which as Sachin Sharma also mentioned, it'll take time, but the faster we kind of align ourselves, it could help us. Some key takeaways is, we need to make sure that we track recipient actions, as in what are the actions that are expected to be kind of taken. So be it from a customer standpoint, those actions need to be tracked for us to really make sure that our books and our records are also aligned. There needs to be a better process between a supplier and a customer to kind of avoid any rejections of any invoices or credit notes. And that can happen only and only when you talk to them, when you kind of have a common platform on which you kind of have a clearance. For example, if credit notes have to be accepted and will be deemed accepted in a particular month, can I have, let's say, a simple process, which could be a token mechanism I give to my supplier saying that this is a credit note, please raise it. I agree. Once it actually gets raised, I then accept it. So there are no unknown credit notes which are appearing in the system. And if it is appearing, then what we have actually agreed upon, then those have to necessarily get rejected. Otherwise, it impacts my input tax credit and corresponding my liability. One very important element one needs to look at is the impact on the accounting and financial reporting standpoint. Typically, for quarter ends, for year ends, for half year ends, you'll have a lot of suppliers raising invoices on you. Those all will, let's say, at the end of March, you will have a lot of suppliers raising invoice on you. That task is going to be easy. The time is going to be limited only, right? So between 14th to 20th, you have to really do a big exercise. So typically, let's say for March 25, the exercise needs to be much more robust than the typical exercise that you would carry out. Parallelly, you will have situations that you do not record purchases when they've actually been raised, though. So a supplier would have raised invoices, but you've still not recorded purchases because maybe it's in transit and stuff like that. Auditors are going to ask you questions around that. There are invoices which are reflected in your GST, in the IMS, which you've not recorded. Either make a provision for those, for those purchases, or you need to record those purchases. Those transactions which are typically at quarter ends, half year ends, and year ends are going to maybe will be discussed by the auditors basis the data points which may be available on the IMS. Provisions for expenses typically is a very which is a number basis on judgment. However, auditors may start relying on the IMS to kind of get what are the kind of invoices that are raised for you to kind of reflect that in your provisions. So those are things which will effectively impact your accounting and your reporting systems also. So it's very crucial for us to really understand how this is going to impact. Your internal and external communication have harped enough on that your customers, vendors need to be aligned. You have to have processes set in. It could be frugal processes, it could be crude processes, but you need to have those, because else you will have situations where, let's say, 3 years down the line, there's an acceptance of an invoice, or there is an ITC that you've agreed upon, which is reflected in your return, but you don't have a backup because some transaction was rejected at that point in time, or accepted or deemed accepted. So those are things which is very, very crucial for you to kind of set. And last but not the least, it cannot be done through a robust IT delivery system. It has to have data points and support because of the size of transactions that you would be entering into. So these are a few takeaways, be it from a process standpoint, be it from a technology standpoint, be it from an action between vendor and customers standpoint. So with that, I'll hand it over to Sachin to give us a glimpse of what are the areas that one needs to take care when we are also looking at building up our tool to be ready on the for the IMS. Over to you, Sachin.
Thank you, Sachin, Amish. You have very well covered current and proposed structure of IMS and ITC. You have also explained highlights of IMS, what sort of action needs to be taken around it. Flow chart explaining all steps, and I'm reading all these question and answers wherein few of the attendees has mentioned that if you can reshare that flowchart screen, which is very helpful. And what are our takeaways from this webinar, which are very very crucial, specifically 14th to 15th of every month, year-end recordings of documentation, audit points, and internal audit points, so and so forth. So as Grant Thornton at Grant Thornton Bharat, we have created a world-class feature-laced powerful technology tool, GTEx Pro. Principally, it will act as a bridge between clients' data and government portal to ensure accurate, timely, and cost-effective compliances, along with multiple features and dashboards. So GTEx Pro is helping clients immensely on compliance, control management, also along with many MIS which around it. So we are very much geared up for IMS as well. We have facility like flexible invoice sections, which include options to accept, reject, keep invoice pending for better control and accuracy. So automated compliance process is also built in. Typically, it means that accepted invoices are automatically integrated into GST R2B and reducing manual intervention. So APIs are also there for IMS functionality that typically would include getting IMS request status, invoice count, invoice details, so and so forth. Or we will also provide Dynamics IMS dashboard, which promptly update on real-time basis, reflecting changes that could impact the taxpayer's ITC. So as we move forward in this ensuing webinar, I have few questions to our panelists on behalf of entire audience. So first, I'll start with Amish. So as a recipient, if I reject an invoice incorrectly, can the same be reversed?
Good question, Sachin. So as of now, where we stand, once an action is taken by the recipient and 3B is filed, it cannot be reversed. So any action till the filing of 3B that can be reversed, be it correct or incorrect. But after filing of 3B, that cannot be reversed. Maybe, in the subsequent month, when the supplier again amends it, and maybe he can refile the same based on the same detail. So probably the next time I got to accept it.
Okay, thanks. So next is what happens if I want to partially accept an invoice but not fully?
So these are, to be very frank, some open points I would say, which the GSTN needs to consider. So currently there is no provision to partially accept an invoice. So it is either an accept or a reject on the complete invoice, and no partial thing as such is presently being implemented in the IMS.
And ultimately, if something partially to be done, that to be done through credit note or debit notes,
In
right?
fact, I would just like to add here, we were also having a discussion that when any recipient rejects any invoice, ideally there should be kind of a communication aspect between both the parties. So there
Right.
could be a possibility of a remarks or a notes section in the IMS as well, whereby for every rejection, the recipient may write few words or lines as to what is the reason of rejection, so that the vendor or the supplier is aware of the same, which
Okay.
will, I'll say, help in a more transparent communication between both the parties. But that is also right now not in cards as what we know today.
Okay. Thanks. Another
And it's very
is
subjective at the moment.
Yes.
absolutely that is very subjective. That is very subjective. So next is can I keep an invoice pending indefinitely? No time limit?
No. So as we have mentioned that invoices can be kept pending on the IMS, they will not form part of 2B and 3B and will, keep on being there in the IMS. But it will only be as per the time limit as per the GST laws. by section 16(4), which ideally is the time 30th November or filing of 3B of the October for the subsequent financial year. Any invoices which are still kept pending, they will be removed from the IMS and credit on those invoices will lapse.
Okay, thanks. So, Amish, we have discussed or spoken a lot about recipient. What facility will be available to the supplier? Anything around it?
So as per the latest updates that we have from the GST and Sachin, so IMS will have two dashboards. One, a dashboard for inward supplies and another for outward supplies. So inward supplies will be for the recipient, wherein the recipient is required to take the actions. A separate dashboard will be there, which will be for outward supplies, wherein the supplier will be able to see all the records and the actions which have been taken by the recipient. But what we understand that this is something which will take some time and it may not be available on the portal, let's say in the month of October. And I think the portal will come out with announcement as to by when it will be ready with the dashboard or the view of the screen of the outward supplies. Further, what we also understand is that presently the government GSTN has released APIs as a recipient. So, with the API, any ASP GSP solution can pull in the records and can also save the actions on the IMS portal. However, for the suppliers part, it is yet to be released, and which the GSTN has said they are working on it and they will release the APIs from the supplier's perspective in coming months,
Okay.
although no timeline specified by GSTN.
Okay. So still lot to be done by government or GSTN side also. It's not only from the taxpayer
Yes,
side.
yes, and as Sachin Shinde had mentioned that running a live system on such a huge number of records is always going to be a challenge.
Absolutely. Thanks, Amish. Over to you, Sachin, specifically business side of question. So, would there be any legal sanctity of the actions taken by the recipient in case dispute arises between both the parties, that is supplier recipient?
It's a very valid question. Now, what you're basically asking is, what if I say I accept the invoice in the IMS? Will there be a legal recourse? How will the courts look at, assuming there is a dispute between the supplier and a buyer on account of a transaction and goes to the courts, whereas one, let's say the supplier produces saying that the recipient has accepted this invoice. I think it's a very valid question. Currently, I think in order, I can only suggest how this will be looked at it from a legal standpoint is yet to kind of come. But it's important that we as recipients put up, adequate safeguards and clauses in our purchase orders, in our contracts, in our agreements to state that such kind of an action which is taken on IMS, which is mandatorily expected to do, should not have any repercussions or a recourse on accepting or letting off my right of litigating that transaction. I think that becomes very crucial. So does PO need to be amended? Yes, to that extent, to this clause, to factor that IMS acceptance or rejections will not have any bearing on my legal recourse which is available of denying or having raising any concerns with respect to the corresponding transaction. I think I can, till the time courts address it, as a businessman, as dealers, we need to be cognizant of this fact and incorporate such kind of safeguarding clauses into our purchase orders, agreements, any kind of MOUs that we would want to enter.
So, in
I
nutshell,
know I've not answered that question, but I've at least tried to safeguard as far
yes,
as possible what we can do.
but I goes the nerve that it's not only limited to, you can say, invoice transaction or how one needs to be familiarized with IMS portal nitty-gritties. It's also about the business clauses which needs to be inserted while entering into any kind of a transaction, whether in a PO or invoice or contracts, etc. That also needs to be looked at for future set of transactions. Or for wherein already clauses have entered, but large amount of invoices or high value of invoices also to be there, that also needs to be seen. So overall business concept needs to be looked into.
Absolutely. Absolutely.
So my next question to you is, what are your views? What can be the rationale behind not allowing credits notes to be kept on pending in IMS?
Uh, if you actually, again, I go back to history and look at what actions the government has taken recently also. Historically, credit notes was something which was always questioned by authorities, be it at the state level or the central level. Because credit notes was always, see, any transaction has to be mutual between both the buyer and the seller. And credit notes was such a transaction which was taken most of the times unanimously, and the other person, so it's like the recipient has already availed the input tax credit, and the credit note is not recognized where the buyer has reduced its liability already. And in the process between these two parties, the government is saying you've raised a credit note, he's not accepted, he's not reducing his liability, you have reduced, the supplier has already reduced its liability, the recipient has not reduced its credit, I am suffering. So I'm wanting to both of you to come on a platform that this is the timeline that I'm kind of giving it to you. You either accept or reject, but take a unanimous decision, whatever you would want to do. If you don't take a decision, I'm forcing that decision onto you because I am now not going to pay any price for your indecisiveness. And I think that is something which, if you know, in a very layman's perspective, I'd want to put across that this is exactly what is going into the government's mind. It says, I don't want to be the one who is impacting because of both parties not coming to the table and discussing and closing out a transaction. I do not want to suffer. And therefore, these credit notes, I'm going to be pushing out saying that it will be deemed accepted, right? If you do not, so you reduce your liability. Thereafter, you want to go and fight with your supplier, you please do it. I'm just trying to read the government's mind, okay? So that I'm able to help and understand and appreciate why this entire concept that has been drawn in, which will enable, if at all there are any gaps on transaction in such manner, we are able to, represent in that manner to say or ask them to take certain corrective actions. But that's the idea about why the government is saying credit notes will be deemed accepted. Okay, so that's the fundamental understanding that at least I'm able to gather or fathom why they would want to have credit notes pushed on to us to accept or reject in that month itself.
Thanks, Sachin. And of course, there are many more questions. If I see our question and answer chat, there are more than, I would say, 35 or 40 odd questions which audience have raised. So I will take, considering paucity of time is there, we are left with only 1 minute, but I will take one question from Tarun Sharma as it is appearing on my screen. Sometimes both invoice and credit note do not belong to recipient and are wrongly reported by a supplier against recipient GSTIN. Then how recipient will be able to reject the credit note? Amish, if you can take this up.
Sure, Sachin, sure. So what I understand from the question is that a credit note comes to me as a recipient, but I am the wrong recipient for that. So if it appears on my IMS and I'm sure that this credit note does not belong to me, then I don't see any challenge in me rejecting that credit note because I can make out that this is not a relevant credit note to me. In fact, the original or the correct recipient will be, kind of amazed as to why he has not received a credit note in his IMS.
Right, absolutely.
I mean,
Then
just to
obviously,
complement that thought, therefore,
yeah,
it is very important from a business standpoint to evaluate your credit notes extensively. So, what credit notes? Because if for some reason or the other, he misses that credit note to be rejected, then it will be deemed as accepted and it will reduce my ITC, and then I have nowhere to go, and then I will have to chase someone who I have no business with. That's going to be a difficult thing to kind of, so it's like I've lost money to someone and someone has found it, how do I chase him? So it's that way. So I think it's very crucial for us to really look at whether there are any credit notes which do not belong to us, okay, and if not, then you upright reject them. So that activity of credit note monitoring has to be extremely robust.
Exactly, Sachin.
thanks, Sachin. Thanks, Amish. So there are more than now 50 questions are there. So we are not able to answer all these, but we'll try to revert all these questions. And basis discussion with the IT team, we will also try to share our presentation. So there are so many questions are coming. If you can share one more time M1 to M3 flow, if you can share uh, one more time the entire flow chart. So that is also coming. Can you please explain the credit note part once again? Uh, we can now on which invoice credit note in the system. So many questions are coming. So I will take. I accepted the ITC as per IMS. Due to section 16, I have to reverse the ITC now. To re-avail that ITC after reversing, will it come in IMS again?
No.
Sorry, Sachin, can you please repeat that once?
So I'll repeat that. I accepted the ITC as per IMS. Due to
Okay.
section 16, I have to reverse that ITC now. To avail that ITC after reversing, will it come in IMS again? So it means that that person has accepted the ITC, but because section 16.4 clause is there where it needs to be reversed, but after reversing, can it be reclaimed further if there is any legal dispute comes to that?
So typically here I would say if you accept an invoice, you ideally close the loop of that invoice because in that specific month itself, it flows into your 2B and your 3B as well. And from a supplier's perspective, also that loop gets closed because you have accepted the invoice. Now, I don't see any chances here of that coming back to IMS. Maybe if you want to reverse that credit and reclaim, that has to be just a part of the 3B of the month in which you want to take that action.
Right. So last question I'll take. What happened if credit note belongs to last financial year?
If credit note belongs to last financial year, but what would ideally be the date of that? Because if we see credit note for the last financial year, October is the last month in which it can be issued.
Right.
Because otherwise the time limit for the financial year 23-24 gets lapsed.
Yes. So that
So
will have anyway. It might happen that it will not come in the IMS.
it ideally can come, Sachin, because there is no linkage of a credit note right now in the GST portal with the original
Right.
invoice.
That
So
is another technology
yeah,
too.
so if I raise a credit note in the month of October, it will ideally come in my IMS. And if I accept it, then my ITC will be reduced.
Right.
So one thing important here to note is that then I should have a proper reconciliation. And before accepting any credit note from a supplier, which I feel is pertaining to previous year, I think there should be a proper communication between both the parties before taking any action of accept or reject on that.
Sure.
Because rejection will increase the liability of supplier in the subsequent one.
Supplier also.
Yes.
Exactly.
Yes.
So it has impact on both the parties. So I think there should be a transparency between the two before taking calls on
Any
credit
action.
notes pertaining to last
Yes.
year's.
Absolutely.
Again, we are coming back to our takeaways of this webinar, that what kind of
Yes,
action we need to take, whether so communication is there, business clauses are there, 14 to 20th date is very crucial, year end or quarter end transactions which are to be repeated, especially in case of a listed company, that is also very crucial. So a lot
Absolutely.
needs to be geared up. Of course, it will take a lot of time to finalize with these kind of a transaction. A lot of coordination, collaboration also needs to be done internally within the company or externally also. So yes, a lot needs to be done. So with this, thank you, Sachin, Amish, ID team, legal team, as well as all the audience, August audience who have joined this webinar. Thank you very much. You have our coordinates. You can just go to the next screen. Let's show this screen for 30 seconds. And you can please reach out to us in case of any question. We'll be happy to answer to the best possible abilities, because lot many things which are yet to be cleared by the department, and lot many question will also come once we'll start filing or using IMS
Using
after
IMS.
this
Yes.
many
month.
practicalities we will see in the coming 2 months, I would say.
Yes, lot many things will come, and definitely will help you out. We have our own tool also which will help you out, and of course a lot many things from process standpoint also needs to be aligned, and definitely we can support you all there as well. Thank you all for joining this session. And here are
Thank you, everyone. Thank you all.
Thank you, everyone. Have a
Have a good
wonderful
day.
evening. Okay.
good day, everyone.
Bye-bye.